Hey everybody, good to be with you. I'm just going to get this rolling here. But for those of you who are here, you've got the Q&A feature in the toolbar down there. So if you would use that to get your questions in as we kind of move along. But definitely want this to be as interactive as possible. Interesting times we're living in, and I definitely want to, have a good group feedback as to what you guys are thinking, and also take your questions, and we'll get into it. So let me fire this up. Hold on one second here. And if you guys can hear me okay, just like if you would maybe use the Q&A box or the chat box and just say, yeah, I can hear you, just so that way. And if you would put in your name and also what market you're in. And then that way I can have an idea where everybody's at. And let's see. And okay. All right. And we're rolling. So guys, this is the FlipLogic Real Estate Show. I'm your host, Ryan Kirk. I'm coming to you live here from the top deck of my boat here in Marina del Rey, California. For those of you who know me, you know me. For those of you who don't, I'm an active real estate investor and lender, and like to deal partner with you guys on a deal-to-deal basis, mostly by flipping real estate via wholesale deals, where I'll back up your proof of funds letters that you generate in FlipLogic with my bank statement, and that's either good enough for you guys to tie up deals and flip them by assignment, or maybe you switch in some more permanent financing and take them down yourselves and do a rehab or a rental, which is fine by me. Or, maybe what we do is we deal partner and we split the deal 50-50 on a wholesale. Either way, however I can help you, I'm here, and looking forward to getting your guys' feedback on the market, and also share, some of my thoughts and insights on it as well. So if you guys would use the Q&A to get your questions in, and if you would, it'd be great if you guys could just put in your name and where you're calling from, or where you guys are zooming in from. So then again, that way I know, what your market's like, or where you're at in the country. So to kick it off, the first thing I wanted to kind of bring up and discuss was, well, first off, as far as the lending environment goes, obviously with the unemployment numbers reporting as high as they just have this last week at 6.6 million, that has caused a big scare amongst lenders. I'm sure that's not the only factor, but it has definitely caused a lot of lenders to just take a pause for 30 days, maybe even 60 days, just to see where this market moves to. What happens? Are people coming back to work? Will they continue to be making their mortgage payments? Will people continue to be making their rent payments? So lenders want to get a feel for that. I can tell you, for me as a borrower, I had a refinance on a house. It was just a rate and term. It was supposed to fund tomorrow, and the lender called a timeout. They said, hey, we don't want to fund it right now. We want to wait 30, 60 days just for the rental market to, I guess, kind of find its footing. So that lender of mine, they're still lending on a fix and flip basis, like on a 12-month term. 90%, you can borrow 90%, so 10% down on the purchase and 90% of the rehab budget. So those are still in full swing. And I'm still lending as well. I'm still a wholesale lender. I'm still here to lend on to back up your proof of funds on your wholesale deals. And so that's still fine. We have to adjust to the market, obviously not be so firm on our ARVs. You know, ARVs are going to update themselves as these new comps close and we have new comps pop up within the area surrounding a subject property. You know, we're going to have new support, new levels of support. And that's a nice thing. And the safe thing about wholesaling is we can always stay in the money. We can always make sure that we've got a deal. We've got enough time to present it to our investors who are going to end up rehabbing it. And ultimately, they're going to end up rehabbing it. And so, obviously, if it's a price that works for them, we know that we can, you know, do the deal. We know that we can move forward on the acquisition. So from rehab investors that I've been speaking to, same thing. You know, everybody on that side of it is also taking a pause. Not a complete pause, not a full pause by everybody, but everybody's definitely, I guess, if everybody is slowing down as far as how many maybe rehabs are taking on at once, and to also maybe be a little more conservative on their numbers and to be buying deals that are more quick fix and flips as opposed to more, you know, complex or custom or higher ARV type acquisitions. So with that being said, again, if you have any questions on what's going on in your market or maybe a deal that you're working on, whether it's a campaign that you're about to launch or maybe one that you already have launched, or a property that you're in negotiations on, or a property that you're in escrow on, or whatever it is, I'd love to get your questions, you know, put them in, and yeah, let's talk about it. But from the standpoint of today, where the market's at and where we're going, are we going to have a massive foreclosure tsunami? The jury is going to be out on that. I think it's really going to show itself here as we move into May, right? To see how things are going to resume. So that's really what it is. Is this disruption going to come to an end? Is it going to come to kind of like a slow somersault and kind of a roll? Which I think that's what it's going to be. It's not going to be a complete everything goes back to normal. So, you know, that's why the only thing we can do is really just be a little more conservative, play it safe, make sure we've got enough due diligence time, and are using three comps that really support the ARV and not using one more recent valued comp that sold and using that for the ARV. So I think it's just a matter of really making sure that we're being more conservative with our numbers and doing the proper due diligence. So with that being said, let's transition to well, whatever you guys want to cover. That's pretty much all I have, unless anybody else has anything specific. It's just you know, the lending market is freezing in some places, not all of it, and you know, it's definitely become a buyer's market. That's the other takeaway from this, is that sellers are going to start softening up. For those who are already in a bad spot, it's just going to get worse. And for those who, you know, whose financial situations have changed, it's going to snowball, and we're really going to start seeing more buying opportunities going into May. So that's about it. But as far as lending goes and doing deals, I'm still here. I'm still doing deals. I'm still lending. Would love to deal partner with you guys on your deals still. I know some of you that are on here, we're in escrow on properties together. So yeah, we just want to make sure that, we've got enough time, 3 to 5 days on due diligence periods and 14 days to close. Fix and flip lending is still in full swing. I say full swing. It's still swinging. It's still happening. But as far as I know, definitely your rental programs, less and less lenders are doing that because nobody wants to make a loan and have a one payment default. So let me check let's see, I've got my Q&A box. So that's it, guys. If you guys don't have any questions, that's all I've got for you for this evening. Okay, so yeah, so I got a question here from Martin, and so yeah, so I was looking in the Q&A box here. So sorry. So Martin asks, so what tools do you use to find great deals? So really, right now, I mean, there's no question that off-market deals are the best deals that you can find. The biggest margin deals are always off-market. So a couple of great sources for off-market deals, believe it or not, Craigslist is a good one. Craigslist it's funny, the best times to check Craigslist is going to be in the morning and in the evenings. But you've got folks who put their problems in the form of real estate up on Craigslist. I'm telling you, Craigslist is a great spot. But as with anything, all your low-hanging fruit, the MLS, Craigslist, anything that you can surf and click from your computer is going to have more competition. It's not to say you can't get great deals from it, because you can. You just got to offer speed, certainty, and convenience, and pick up the phone and make the call and connect, right? So aside from Craigslist, is going off market. I know this market that we're going into is becoming more of a buyer's market. So yeah, you've got deals on the MLS. Obviously start paying more attention to that if you haven't been. At least even see how the market's changing. Stuff that's going active, stuff that's going back on market, stuff that's canceling, expiring, falling out of escrow. But the other great place that I really love to get good deals from is just from pulling a list of vacant absentee owned properties with high equity. So if it's vacant and it's absentee owned, or I should say if it's absentee owned, usually it's a rental, or usually it's a rental if it's absentee owned, right? Or maybe it was a second home. So right now, people who have absentee owned properties where they're using it as a short-term rental, maybe it was an Airbnb, or maybe it was a long-term rental and the tenant's now not paying rent, or maybe it's one that recently went through eviction and it's vacant. But the point is, if you pull a list of high equity absentee owned homes and you do a campaign, two great campaigns, or two ways that you can campaign and touch it from multiple angles, is one, doing a direct mail campaign, and you can just do it by postcard. If you send a postcard out to all those people, pretty much everybody's got a mailing address, so you can hit them all by postcard. The good news is with postcards, it's very targeted. Maybe the not so good news is that, it can be expensive. It can be at least for our postcards that you can generate and do, and it's handwritten right there in FlipLogic, runs around 60 cents a postcard. But that's not bad. I mean, for, postage, it's all handwritten, populated, proven. Just a couple of clicks, upload your list and send out a postcard. You can hit your list that way. A great way that I think to follow up with that, because now that you've created a warm contact, they've got your postcard, you're going to have, again, like 3% who call you right away. The other 97% who either don't call or they take more time to call, you can coax those people into calling you by touching them a second time, a third time, or a fourth time. And you don't have to do that with the postcard. You can do it with what's called a ringless voicemail. So ringless voicemail, for those of you guys who don't know what a ringless voicemail is when you've got like a missed call shown on your phone, but you didn't hear it ring and you've got a voicemail, that's a ringless voicemail. So the phone didn't ring and there's a voicemail on your mail, on your messaging machine there, or your message center. Maybe that's annoying to some people, but if you are calling, letting them know, hey, this is so-and-so, hey, this is Martin. I'm a real estate investor. You may have got my letter or my postcard in the mail. I sent you one because I was interested in buying your house. I haven't heard from you. Just wanted to check in. If you would, give me a call. Would love to talk to you about your property. I'll give you a free evaluation, and we'll go from there. Thanks. So that's a second way to touch people multiple times and do it very cost effectively, as ringless voicemail only costs somewhere around 6 cents is what we've got it down to, 6 cents per successful connection. And so you could literally send out, hundreds or thousands of those, simultaneously. So those are two great ways to connect with people. And again, whether that list is an absentee-owned list, or maybe you've got another source of lists that you like to pull. Foreclosures is really going to be one that upticks here most likely. The foreclosure list, it takes 90 days of missed payments before the notice of default posts to the list. So we're going to see a lag on that. But again, for those who are already kind of on the edge there, this event is going to be the one that pushes them over. So, a list of notice of default, or a notice of trustee sale, or a probate list, or divorce list, or, a death certificate list. Any kind of trigger list like that, is also a good list to pull. And then again, to make a connection via a letter or a postcard, maybe followed up by a ringless voicemail. So good question, Martin. I hope that helps. And again, for any of you who are also, who know me or who don't know me, but, you can generate proof of funds backed by, me personally right out of FlipLogic. And so, definitely now's the time to go shopping. Now's the time to, start putting out multiple offers, tying up multiple deals, and, just making sure that you've got, enough time, to market these things, or if we're going to help you market them to our investors, enough time for us to help you do that as well. I know in our market here in Southern California, we usually only need about 3, sometimes, 1 to 2 day inspection period, but I don't know, these are interesting times. So, definitely 3 to 5 days due diligence period, or just call it 3 to 7 if you wanted to. 3 being the more aggressive, 7 being the more conservative, and then for a closing period of about 14 days. And then in slower markets, you may want to give yourself like 21 days, but yeah, 5 to 14 days, usually works pretty well. Let's see. So how do you see house values develop over the next 24 months? I don't know. That's the $1 million question. I I really think this month, this month of April and May is really the catalyst. I think it really is, because it really is going to become, well, it's going to be a question of, do things go semi back to normal? On the opposite side of that equation, things are going to become more attractive for those whose incomes haven't been interrupted, and because rates are going to be like sub 3%. I mean, when was the last time you were able to go to your loan officer, go to your bank and ask them for a mortgage quote and get something that's below 3%? So, and I know FHA, you could look up FHA loan limits in whatever county that you're looking to buy in, and you can see if FHA raised their loan limits for 2020. So people are going to have more buying power moving forward for those who can. Question is going to become, are we going to see a wave of foreclosures coming on the market? And of course, is that going to be like on a macro level, or is it just going to be in certain pockets? Maybe where, this virus, has disrupted areas and their local economies the most. I don't know, but that's the thing that's going to put downward pressure on prices. So it's tough to say whether that's what's going to happen or not. Coming out of this, again, people are going to have more buying power, low rates. Is there going to be more inventory that's going to depress prices? I don't know. We shall see. What do you guys think? Actually, Martin, are you still there? Do you have I wonder. I'd love to unmute you and get your opinion, because I think.
Am I unmuted?
Martin, you there?
Hey, Ryan, how's it going?
Hey, how are you?
Pretty good. Yeah, it's $1 million question, right?
Hey, yeah, real quick. I was actually, I obviously saw your Instagram. I love your little compound that you built up in Joshua Tree, right?
Yeah, that's correct. Yeah, all right. It's a perfect isolation space right now.
Dude, I love it. It was so great.
Yeah, we should hang out.
Yes, definitely.
Yeah, house values. It's a tough question, right? It's some sort of also why I ask you what you think, but I think it really depends on the area. I can certainly see now more and more people working. Obviously, right now everyone works remotely, so I think what's going to be interesting is, like, are we going to see a trend where people move towards, less costly areas and work more remote, and so therefore some other areas appreciating more than very condensed, city areas. I think that's something probably to look a little bit into, but it's going to be really interesting on how social dynamics evolve over the next 3-6 months.
Yeah, that's a really good point. Yeah, if people don't have to be tethered to a certain geographical area, and a lot of higher cost markets already, well, I know California specifically, but seeing more people migrate out than have been coming in. Yeah, if now they're not, if they found a way, or they've had the leisure of being able to, through their company, be able to work remotely. Yeah, maybe some people transition out to that place they always wanted to move away to. I don't know. I deal with a lot of tenants with my rentals, and I've seen just recently in the last 30 days. I'm not saying it's been this event has been a cause of it, but I've seen people moving in from like Washington, moving to Alabama, Texas moving to Alabama, Virginia, Florida moving to Alabama. Again, those are very, isolated, and I don't know what their employment was or what they were doing, to be honest. But yeah, I could see more of that happening. and that could affect prices in higher cost areas. There's no question about it that definitely sticking closer to your more median priced deals is the way to go. You know, staying away from higher ARVs and more, you know, definitely within FHA limits, loan limits, and just into your more median affordable housing prices, because that's just going to be the stuff that's more in demand. Are you buying anything else now, or looking at anything else right now?
Am I still unmuted? That's awesome.
No, you're off mute.
Okay, awesome. Well, I'm watching closely the market. So, in a couple of markets where I'm looking into, my agent there gives me deals, but I'm almost believe there are going to be better deals coming up over the next 4, 6, 8 weeks. So I'm kind of holding onto cash, just like watching closely. What I've observing is that many houses are not really hit yet, in the sense of like, I don't really see the prices go down so far. So I'm a little bit surprised by that, and that might be just the case where the agent that they have been working with, looks okay, what's listed and prices accordingly. But I think we're gonna see more price drops, and I'm set up on Realtor, on the Realtor app, and I'm almost getting a notion over the past 5-7 days. I'm getting more notification with price drops. So I think the market is gonna start adjusting as property is gonna be listed longer, and then suddenly we're gonna see some price reductions. But I didn't really see
any specific markets you're talking about, or that you're watching.
So, for example, like Huntsville, Alabama, that's a market that I've been investing in. And that I'm
okay.
watching.
And you have not been seeing price reductions there yet.
A little bit over the past days, but not very much, right? It's not that I'm saying like, oh my God, that's now a crazy amazing deals, right? I think it's gonna take a few more weeks, I guess. Maybe where other investors are not getting the rent income from the tenants because the tenant cannot pay, and suddenly some sort of the investor realizes like, maybe instead of like having 3-4 properties, I'm gonna sell one, right? So I think, I don't know, my impression was a little bit, it's I don't fully see the impact yet in that sense, but I mean everything is just so, yeah.
And I would agree with that also, because I mean a lot of people have received their stimulus, so even for those who have been disrupted, whose incomes have been disrupted, that they either just got an SBA loan, or their employer did and put them back on the payroll, or they got an unemployment check, or they got a stimulus check, or maybe they got all three, or 2 out of the 3. But I think people have, whatever disruption they've had, there's still that liquidity coming back in, that stimulus that's coming back in, that's allowed people to still keep up with, with their monthly bills. I know from experience, one of my tenants, she is the manager at an IHOP, and she always pays on the 1st. Obviously I didn't see the rent come in on the 1st. On the 2nd, I think maybe it was the 1st or the 2nd, she sent me a message saying that, obviously the IHOP closed their doors. Maybe not obviously. A lot of restaurants are staying open for takeout, but I guess that's not working with IHOP's business plan. So they closed their doors, but she collected an unemployment, I guess, either her unemployment check pretty quick, or a stimulus check pretty quick, or maybe had some help from family or whatever it was. But, she paid the rent on the 5th and said she's not going to have a problem, paying it, for the next couple of months moving forward till her place of employment reopens. So that could be a pretty good example of, these stimuluses fill in the gap. and then the question, which we were talking about earlier, which is, will things kind of go back to normal, at the end of, or at least will things reopen? Will businesses be functioning? Will they be flourishing, come May?
I think also many investors are going to be more cautious, because it's almost like a wake-up moment in that sense, to watch more closely their cash flow, but also their investment strategy. And so I can see that certain investors are just going to be a bit more conservative. The probability that we're going to see something like that next year it's pretty low. I hope, but
Yeah.
but still, it's some sort of a wake-up call, and so let's see if some investors let go of some of their properties and to a good price. But I think so. We're going to see some deals.
I agree. Right now is kind of a time for people to check all their levels, make sure, everything is still balancing, and everything is still coming in, and then reevaluate, and then, take action on opportunities that come. Real estate's kind of a slow moving train when things like this happen. So, if we're still going to see the effects of the fallout, in as far as it shows up in price reductions, that we're probably still a little ways off of that. Obviously, the market still, people's individual circumstances, people still do price drops, and, they got to move it today. And so they're willing to give up price for the certainty of a quick closing. So that still happens all the time, every day, just not maybe, in such a wide number as maybe we'll see more of, in the coming weeks.
Have you also seen, so what I've seen on a couple of occasions, that other investor friends recently prefer the stock market over real estate, because they believe like, oh, okay, there are like good deals now coming, S&P 500 up a lot. And so there's some sort of postponing a little bit their real estate investments. Are like, hey, like for the next, I believe right now I just want to buy stocks. So which might result in less investors.
Who could blame them? Who could blame them? I mean, definitely me too. I never play in the stock market, and I'm definitely, making some positions now, because it's just everything is on sale, 30% off, 40, 50, 60% off. So yeah, even if it's just a little bit, if it's just setting up some small positions, I mean, I don't know when we're going to see prices like this, unless, like you said, maybe it's unlikely something like this will happen next year. So.
Yeah, from a longer.
How about you?
Yeah, sorry.
Are there any stocks? Are there any stocks that you're looking at? Is there any companies that has your attention?
I mainly invest, or I purely only invest in index funds. So it's I had like a funny epiphany, I don't know, like 3 years ago, where I did a bunch of, for the past decade, I did a bunch of individual stock trading. But then like 3-4 years ago, I put a position in S&P 500 index fund. And I realized S&P 500 was outperforming my individual trading. I was like, oh my God, like I'm wasting all this time. Because like, obviously, we always believe we're smarter than, some, other investors and traders. But then S&P 500 outperformed me. And so I was like, oh my God, like what am I doing? And so I sold all my individual stocks and just, put in the index funds. And so I started to do, buying again, mainly with every drop, buying a little bit. The past week has been pretty good. I think you will never hit the bottom in that sense, right? It's just like, if you want to time, like, okay, now we're at the bottom and now I put all 100% in, like, you will never invest at the right moment. But it depends on the investment strategy. My strategy in terms of stocks, S&P 500 is more long-term, let's say 10, 15 years in that sense, having some positions in there. And from this horizon, I believe, right now, it's probably a good time to start considering going into the market with a longer perspective. But who knows? I mean, government is putting so much cash on the market right now, right? I mean, this might result in some inflation. I mean, they're huge debt now. I'm really curious what's going to happen over the, some sort of next year or a couple of years, right? Because there might be some impact on a larger scheme.
Yeah, no, I agree. I mean, yeah, 2 trillion in stimulus and, all the other injections of liquidity that, the Fed's done. Yeah, I mean, the market's just going to be swimming in money, or is swimming in money. It's going to be interesting to see, again, it's just that question, do things kind of go, I don't know, maybe there is no back to normal. I haven't really been paying attention to China as much. I don't know if you have or not, how back to business as usual it is over there, but it would be nice to see things, get back to normal. So then, yeah, the markets, everything could have a pop. I mean, inflation, too much of inflation is not a good thing, but deflation, it's even worse.
Yeah, what I've been seeing is that China started to stepwise opening up, but still people are very cautious in that sense. But it seems it goes back to normal. I mean, there's probably some debate on the number of cases reported, I would say. But I think the US in the past couple of days, we have seen what might be a flattening of the curve, so which is some optimism.
Sure hope so.
That's probably why the stock market now had a big rally today. But I think there's still so much, fluctuation, and who knows what's tomorrow. There might be just like a bad news, and then suddenly it drops again. It's just everyone is nervous.
Yeah, everybody is nervous, I guess, until we can start seeing some. For instance, do you know anybody who's gotten sick, or anybody in the hospital, or?
Yeah, actually, a couple of people. Yeah, and they're both in their mid-30s, and so they were healthy before, and so they had to go to the hospital. One of my friends just recovered. I mean, she had like huge fever for several days. They put her in an ice bag almost in the hospital. I think she told me, I talked to her a couple of days ago, and she was saying the most terrible thing was no one wanted to go into her room for like 6 hours. It was like everyone was just like scared in that sense. And so she laying alone in the room on like ice bags to cool down the fever. And for like 6 hours, no one coming in. And she's recovering now.
That's good. How long do you know about how long she was in there?
7 days. Yeah.
7 days. Okay.
7 days in the hospital.
Dang. Well, I'm glad to hear that she's on the mend or just recovered.
Yeah, she's recovering. I mean, she's still very weak. She works for an hour and then or a couple of hours, from home, and then she kind of feels tired, has to take a nap an hour. So recovering. Her husband just has like very mild symptoms. So like a little coughing, or like a little fever. But I mean, she got really hit, and her husband was like just a little sick in that sense. So it's so unpredictable.
Right. I guess that's the scary thing about it is, the unpredictability of just how severe it can be. So, dang. And I guess even more so just the whole respiratory part of it. Like, now that you brought it up, actually, it was one of my wife's friends, and she posted a video of herself, and literally I heard it, and I wasn't watching the screen, and I thought like this was somebody like making a joke because her voice was so just hoarse, like, I got the coronavirus. But she was, and then I looked at the screen and she was in a hospital bed, and it was just, I mean, she is somebody who has, I guess I should say, some pre-existing, I don't remember what you refer to it as, somebody who basically she goes to the hospital maybe once a year. When she gets sick, she gets sick. So but same thing. It knocked her down for a couple of days to the point where, you know, she had trouble breathing and obviously couldn't speak very well. So yeah, I guess that's the scary thing about it. So that's the thing I think about when, you know, trying to go back to normal is just how cautious, just how cautious things may, you know, the economy or people, you know, may be in the buying decisions that they make. I don't know, based on that. I don't know. Maybe as far as like travel and entertainment goes. Or maybe people are just willing to risk it. I mean, everybody's going to be ready to go, and hopefully this thing kind of just dies out from all the social distancing as well. So I hope it's enough to stomp it out. All right. Well, does anybody else have any other questions, or maybe would like to add anything? Be happy to put you in the hot seat and have you add to the conversation. Man, it's great getting perspective like that, Martin. Appreciate you sharing that about your friend. It just goes to show how much things have changed from when it first came on. Came onto the scene as being no big deal, you know, and younger people or people in good health, just weren't really scared or cautioned by it. And then just to see it really take effect on some people, and it really shifted just the whole feeling around this thing. Well, I think I'll call it. So, Martin, appreciate your input. You know, thanks for your questions and your commentary.
Awesome, yeah.
And thanks everybody else for being. And thanks everybody else for being here and being a fly on the wall. And if there's anything that I can do to help you guys do more deals, or take a deal down, reach out. Let me know. All right. Until next time. See you, everybody. Bye, Martin.
Bye-bye, Ryan.